Hey gang, welcome back to the weekend edition of The Trading Edge. If this is your first time joining me, my name is Akil Stokes. I'm a professional currency trader. I'm also a trading coach over at tier1trading.com. And this is a daily video that myself and my trading partner Jason Greystone provide to our Tier 1 Premium and Trial members on a daily basis, giving you a few tips to help you along that trading journey, as well as showing you a few opportunities that are on our radar. Now, in today's video, I'm going to give you a tip to help you with technical analysis. So if you're a technical trader, someone that uses the charts, this is going to be right up your alley. But first, before I get into that, because I'm going to forget, tickets for the Royal Ball are on sale now. So if you pre-registered, if you're on that list, you should have gotten an email on Friday. If not, I'll put a link below this video so you can grab your tickets for the 2018 Tier 1 Trading Royal Ball. It's going to be an awesome event. Tickets are going to go fast because there are only limited spots, so don't take too long to think about. Also, at the very end of this video, I have a very important question that I need you to answer. I need your feedback because we're going to have an awesome panel discussion later in the week about it. If you saw my post on social media, you know exactly what it is, but I'm going to ask you, what do you think is the best investment? I'm going to give you 4 choices. So let's get into the video. If you guys are familiar with the book Trading in the Zone, written by the great and late Mark Douglas, you know that he put traders into basically 3 different categories. There was the top category of your successful traders. There was the bottom category of basically your really, really bad traders. I call them the 90-90-90, right? 90% of traders lose 90% of their funds in the first 90 days. And then there's a middle tier he called the boomer busters, and typically there's about 5 to 10% in that top tier, about maybe 50% in that lower tier, then maybe 40 to 50 somewhere around there in that middle tier. And the middle tier of traders are probably where most of you are at, and it means you're that boomer buster trader. You haven't yet seen consistent success, but you've seen enough success to know that you're not bad, to keep going. It's very similar to golf. I was watching the Open Championship last week, rooting for Tiger, and the announcer said something very cool. He said, golf seduces you into doing things that you know you shouldn't. And trading is the same way. But if you've ever played golf, right, it's one of those games that's very frustrating, right? Either you're good, you're excited, and then you blow it all on one hole, and you get frustrated, and you end up above par or above whatever your version of the par is, or you're having a horrible day, then all of a sudden, boom, you get a birdie, and you're like, oh man, I can do this, right? It keeps giving you this false sense of hope, enough to keep sucking you back in. And for you guys that are in that middle phase, that boomer bust phase, it's the same way, right? You're good, you're having really good trading results, and all of a sudden, maybe 1 or 2 trades, boom, you blow it all, and you're back to square one. Or maybe you're bad, you're right on the edge of giving up, saying trading isn't for me, and then you get that super awesome trade that wins and makes you a million pips, and you're like, oh, I can do this, right? You get that confidence. And the negative is that so many traders get trapped in that stage forever, right? They kind of just stay there, not enough to really become consistently profitable and turn it into a usable skill, a usable business, but not bad enough to blow it all, and you just end up wasting time. And a lot of that is due to consistency. And here's my kind of theory on thing. It works within the rules of 3. Consistent analysis plus consistent execution equal consistent results. I'll say it again. Consistent analysis plus consistent execution equal consistent results. And the problem lies at the top. A lot of you guys are not doing consistent analysis. I work with hundreds and really thousands of traders on a daily basis between the different avenues that I teach traders on. And it's very interesting to see many traders, the inconsistencies in how they look at a chart, right? One day they show me one thing, the next day they show me another thing, the next day they look for something else. And it's very easy to get sucked into that trap because we often see what we want to see. So in today's video, I want to share with you a tip. This is a live session we did, and I'm going to share with you a recording of it, and then I'll come back and give you some new analysis. But a tip that I gave our traders on how to help becoming more consistent with your analysis, and hopefully you can fix the next 2 levels after that. So check it out. What you'll notice is that has anything really changed? It has been a slow week, but has anything really changed with our analysis throughout the week? Matt says nope. Right? This is why I say if you're a swing trader, whether you're a pattern trader or a structure trader, you should know days in advance of your setups, right? We looked at this, we didn't have the live room Monday, but we could have looked at this Monday and nothing has changed with the analysis, right? Monday, we took a look at this. We did our 1-to-1 measured move, right? We did the same analysis every day. We did our 1-to-1 measured move. What else did we put up there? Matt says we had a bat. We'll draw that bat in. Who can remember? Anything else? What do we have? What do we have? Come on. Structure, yep. We had our structure zone. Boom. What else? Fibs, yep. Same thing every day. And we noticed this when price was right here. So our job as traders is simple now. There's 2 things we need to do. We need to wait, 1, and 2, not forget about it. Wait and be patient, right? Do you guys agree? Now, for you guys that are learning, here's what I would do. And you see me do this every day. Every day when I start my charts, I erase everything. If you have the time, and this was a trick. I have a really good trading buddy. His name is Roy Painter. Right? If you guys are on Twitter, you may have seen him, or on Facebook. Roy Painter, and me and him, we basically did our training at the same time. We were kind of like loser buddies. We were both struggling in trading, so we kind of formed that relationship where we talk to each other and try to help each other out. And we would talk a lot about just getting better at the skill. And one of the conversations that we had that always sticks with me is that what we would do is each week when we did our analysis, we were swing traders, so a lot of our analysis was longer term. But each week when we did our analysis on our portfolios, and we were trading like 20 pair portfolios because we were wild and crazy, right? We would erase everything. Whether the move was made or not, we would erase everything. Who knows why? Everything would get erased. Blank charts. Nude. Matt says eliminate past bias. That's a good answer, but that's not the reason. That's a very good answer, though. Latch says you have a fresh bias, not influenced by previous things. So you guys are on the same page, which these are good answers, but this wasn't the reason. Here was the reason. If we were doing our analysis correctly, right? If we were consistent in doing our analysis, I had a great conversation yesterday with Andrew. He's in the room this morning, where Andrew was talking to me about discretion, right? And he was talking about, hey, he showed me a picture of a training I did and was an iffy situation. Hey, Akil, how come you chose this as the new structure high and not that? Because if you chose this other one, it would have been a violation. And I told Andrew that's just the move that stood out to me. And Andrew told me that his goal right now is he's going through back testing, he's training his eyes, is to build kind of ironclad rules on identifying trend, like new structure highs and outside returns. And I said, Andrew, that's a good idea, but understand there's always going to be discretion. Always. Now, you can have ironclad rules when it comes to stuff like identifying a double bottom or a higher high, higher close. But just like we talked with Anthony the other day too, there's always going to be some bit of discretion when identifying like legs, swing low to swing highs. It's always going to be a little bit, and that's okay. What's key is that Andrew recognizes the same type of move each time. So it doesn't matter if Latch looks at something and sees something different than Andrew, or Matt looks at something and sees something different than Andrew. All that matters is that Andrew consistently sees the same thing each time.
And as he goes through the process of learning and training and backtesting, he's going to train his eyes to do that. So there will be very little discretion from his perspective, maybe overall with other traders, but not with him. And that's okay. And Andrew says, that's what I'm realizing now. And it's not a negative, but it's tough, especially for you guys that are like, again, we talked about like the techie and the engineering people who like, you need a solid answer. Like I need a yes or no answer because we want that from the market, but we can't get that with everything simply because the market is imperfect, just like people, and the market is really us. But the reason we would erase our charts every day or every week is because if we were consistent in our analysis, we should be able to redraw the exact same analysis and the exact same opportunity again. Am I right? Right? I erased this each and every day since Monday. When I drew it on each day, have I done anything different? No. The bat pattern starts at the same leg. The AB equals CD is the same mark. The Fibonacci's are the same. You know what that tells me? That tells me that I'm consistent in my analysis. And that's good. So that was a little trick that Roy and I did. We did it every week. Again, we were mainly swing traders. But I would get in the habit of doing that. Testing yourself, having two charts open, put one chart to the left, have another chart open, and then redo your analysis and see if it's exactly the same. If it's exactly the same, that's a good sign. And if it's a little bit different, and maybe you found something else. But it's a good training tool. And during these dog days of summer, when markets get slow, just do more analysis. It's just work on the skill. Work on the skill and prepare for September when things are going to start to go wild. So give it a try. Andrew says, my journey from new, I'm realizing I need rules to eliminate randomness, but then realizing those rules I have created are a little too ironclad. And that's the balancing act, Andrew. Again, for the longest time, I tried to create rules for impulse legs. And what I ended up doing is my rules were so ironclad, right, that I ended up eliminating a lot of the opportunities that were valid because they didn't meet my rules, but they were still valid. It's the same difference. It's think about it like this. We're gonna have a good training lesson on CTS trading on Monday because we got a lot of questions on it. We had one trader in particular that gave us like 18 questions. Greystone's like, let me handle them.
So one of the biggest benefits of our live trading room, whether it's with myself or Jason Greystone, is that we are very consistent traders. Each and every day we go through the same routine. We watch the same portfolio of pairs. We go through our top-down analysis in the same order, daily, 4 hour, 1 hour, 15, and you really get to see the consistency in the analysis, right? Boom, 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 boom. We even mark up the charts the exact same way. And it's very similar to getting reps in the gym, or for you guys that have played sports, very similar to your coach giving you drills. I remember when I played basketball, we used to do this layup drill, and we used to have to make 25 layups before we can go to the next drill. And layups were easy, but each and every day we started practice, right? Laying up the ball, laying up the ball, laying up the ball, just working on consistency, right? Doing the same action the same way every single time, and that is a massive help in your trading. So if you ever get the chance, come join us in the live room. I think you'll find it to be a great experience to help with your trading. We do offer that as part of our 14-day trial, so along with some other stuff as well. But get in there, spend some time with us, spend some time with the community, and start seeing what consistent technical analysis really looks like. So with that being said, let's follow up on that pair because things have slightly changed right over the last few days. Let's follow up on that pair, and I'll show you now what's on my radar for the week ahead.
So coming back to the pound dollar a few days later, you can see that our situation has changed. Now, price action did make that upward thrust. However, we didn't quite get to the completion level that we were looking at. If you guys remember, we had a big zone here of previous structure resistance. You can see we almost tickled the very bottom of that, But as far as our advanced pattern completion goes, we did not quite get to the level that we needed to see hit in order to trade it. Instead, price action has returned back down to our previous outside return. And if you guys are new, a previous outside return, that's a phrase that I use for a retracement. So if we look at this initial move right here being our swing low to swing high, this is going to be called our pullback or a retracement. The market then made an extension, so moving like a traditional trend. And now we're coming right back down to that previous level of structure support. And this is what I call a decision point. Now, I call this a decision point because this is a crucial point in our analysis. Whenever I do analysis, I use the if-then thought syntax, right? It's funny, I moved into a new office recently, and one of the guys in my office is a tech guy. He's actually building a video game, and he was listening to one of my live rooms and got very interested. And we had a very nice discussion on how trading is very systematic, just like the back end of his video game. Now, I know nothing about technology, so that's about as far as I can get into as the details go. But I was explaining to him how we have rule-based decision, right? If this, then that, if this, then that. And he's like, that's right up my alley, dude. That's the same exact thing we do in programming. So when I talk about this decision point, I mean, it's going to be a level where we're going to have to start possibly changing our thought process. If this level of previous structure support is violated, then we can make the prediction that this is going to happen. If this level of previous structure support holds, then we can stay off our initial prediction. So by no means is the initial prediction out the water. It's changed a little bit as far as the kind of the CTS stuff in there, but the advanced pattern is still valid. However, what I want to show you guys today, because you guys that are on the platform, we've been looking at this all week, so you're bored with it. What I want to share with you guys today is, well, what happens if this level of structure is violated? We can have two things here. One, we can have a potential head and shoulders pattern, right? We look at this as the left shoulder. This can be our head, right? We get a retracement here, completing our right shoulder. Let me just double click to see if my RSI is on. We're not seeing the drop in volume or the drop in the RSI, so that's we can't add that as far as our to our list of confluence. But if we get a violation of this level, this would give us a head and shoulders top, which would be a bearish opportunity. Now, if price action is going to continue lower, we also have another advanced pattern setting up, and it's going to be in the form of what's called a cipher pattern. And I'll draw that on for you guys right away. Now, I know many of you guys are using TradingView, so this is a perfect excuse to use this lesson. TradingView, they have a thing called the pattern tool, right? I wish I had my Ninja Trader up. It's bombing right now. But we have this new tool that we're releasing to our traders called the cryptographer, where it's a manual drawing tool that draws patterns on, shows you risk rewards. You can adjust here and do that. It's like the original tool we had, but on steroids. It's going to be a massive help for those who liked our pattern recognition software called Enigma that shows the patterns for you, just pops it up. For those of you who like the manual mode, so you don't like being given the answers, but you like having a way to kind of work through the problem yourself with a lot of assistance, it's an amazing tool for that, and that's going to be out to you guys soon. You've seen me use it in a live room. We just have to finish up the manual, right? We don't want to give you a tool with no instructions on how to use it. So we're getting the written manual ready for you. That way we can shoot you the tool, shoot you the written manual, give you guys a chance to play around with it, and then of course do a Q&A session where we walk you through and answer any questions on it. And remember, for you guys that sign up for the 14-day trial, all the software is included with that. So you'll get a chance to try it out as well if you're a trial member. But anyway, if you're here on TradingView, there's two different tools. They have the XABCD tool, which you can use for most pattern formations. But there's also a cipher pattern tool. And this was a tool that they created a few years ago after I voiced a few complaints. And the complaints I had was just that the way I draw my Fibonacci's was different than how their original pattern tool was drawing the Fibonacci's. And what happened was traders were using the original pattern tool to try and find cipher patterns and just relying on what numbers that pattern tool gave you. And they were finding a lot of invalid cipher patterns that they thought were valid. And this is why you always want to do it manually anyway, in my opinion. But TradingView was nice enough to create this tool for us where it actually draws out the cipher pattern the way we trade it. And well, seeing how we are the ones that found this pattern, It wasn't hard to convince him to do so. But we're looking at a potential cipher here, X to A to B, B to C. And if price action comes down to this 786 Fibonacci retracement, that 130.11 area, that's going to give us a cipher pattern completion, which is going to be an advanced pattern formation that you can buy, right? So a buying opportunity down here. And of course, that potential reversal zone is going to be between that 786 and the low of your X leg. So that's what's next on the pound dollar. And again, it's a good example of how we're always following up on analysis, right? Our analysis never gets stale. It may not change too much, but one thing you don't want to do as a new trader, you don't want to get locked into your initial way of thinking, meaning that once you analyze something and come up with a prediction, you stick with it no matter what, right? The market changes, it ebbs and flows, and as it does so, we just have to make adjustments and we have to stay ahead with our predictions. Now, this may never happen, but if it does, now we're prepared for it and we'll be able to take the opportunity instead of being late to the party, which is why many traders miss out on very good trading opportunities.
So I hope you guys enjoyed that video. Before you leave, I have a question for you. This was a question that I posed on social media the other day. If you had to choose one of these categories, right? If you had to choose one of these categories, which one would you choose? Would you choose the $1 million straight up? Would you choose the 50-50 chance at getting $200 million? Lifetime travel for free, or 3 years of following the richest man in the world? Leave me a comment below. Let me know what you think. This week, probably Friday, it was going to be Monday, but probably Friday, we're going to have a group panel discussion between myself, Darren, and Jason Greystone discussing this topic and letting you know where we stand. I think it's going to be interesting because we all chose different answers, so it should make for a good debate. So you can check that out on the Trading Coach podcast coming out this Friday. And until next time, traders, plan your trade your plan. Remember to share this on social media, and I hope you guys have a great weekend.